Good morning. And just checking the chat here. You're welcome, Neil. That's why we're here every day, to share and make money, of course. All right. Oil continues to act bullishly, like it's going higher, but these darn oil stocks don't. I've seen in the past where they disconnect like that, but eventually they catch up. So we got to keep an eye on them. And the ones that do look like short setups, like this SLB, I mean, that is like classic 1, 2, 3 continuation to the downside. Maybe it needs a retest, but the clearly short setup there. And same thing with Halliburton. So we'll see what they do. It's just interesting with oil looking as bullish as it is. Today it's early, but look at last week's bar breaking out above this little consolidation there, and it looks like it can go higher, and it's got room to do so. So we'll see what happens with the oil stocks and the ETFs. Oil higher, working backwards here from interesting. Gold kind of hanging on here. Some slightly bullish price action after this low here. Bearish wide range bar being ignored to some extent. Retracing, I'd say about 80% or so into it. So that's a good start to reversing that, which would be, this is still in an uptrend, but the retracement was deep and it came down real hard. Patterns like this suggest that some consolidation will be needed, and maybe a retest here if it can continue to go up. So if it can clear last week's high, maybe it gets going, but not something that suggests it's going to do something right now. Let's take a look at bonds. Just continue to consolidate here. That downside shakeout. And, this didn't give an opportunity to short, meaning when it was consolidating here, it looked like it was going to go higher. I guess whatever news, whatever came out at the time, I don't remember. In any event, it had come up, it pulled back, it was chopping around, wide red bars down, coming right back up. It had to look like it was going to break out of this consolidation here and go higher, in the move that preceded it. And then it breaks to the downside and immediately recovers. And that's a bullish price pattern. And let's kind of forget the reasons why it did that at the moment and just focus on the pattern, which is applicable to anything that we look at when we see that. So whether I saw this in crude oil or Apple computer or semiconductor ETF, I would interpret it exactly the same way. And that for whatever reason, there was this moment of weakness, which turned out to be a shakeout. And the pattern is one in which it dips down, it comes right back up into that area, which becomes resistance and refuses to drop again. When I say it didn't give an opportunity to short, well, because it didn't set up a pattern that we short. And that's one of the positives of our style of trading, and that whereas another style would say, hey, here's a breakdown. Let's just put a sell order halfway up, 3/4 of the way up, what have you. And then the expectation is for it to go lower. Well, I'm not saying there's something wrong with that style. What we utilize is an approach that says, okay, we know that there are traders or investors or hedge funds that are going to do that. Let's wait to see if they can create enough selling pressure or supply to form a reversal pattern. And that didn't happen. So those that had that style, they're probably sitting there wondering, this isn't working out. What do I do? My stop is up here. Maybe I kill half the position. Maybe it'll roll back over again, but it's not working out the way it had anticipated after a break. Whereas we recognize this as a bullish pattern after the fact, of course, that's consolidating, and it's suggesting it's going to go up, and we're just waiting for a moment where it looks like it's ready to move now. Doesn't quite look ready to move right now, but it's getting there. And the other side of that story is that if bond prices are going up, that means interest rates are going down, and you got to keep an eye on these yield curves, which are getting dangerously close to inversion. Right? This is the longest one. It's still up here at the initial warning point. The dotted line is inversion. And down here, the shortest one is just tickling right on the inversion point. So if this breaks out, it's going to be something that's definitely going to get the attention of the broader markets. And YM is kind of grinding its way up there. And, gapping down a little bit here today. I haven't checked the different stocks. I saw some news on Boeing again, so maybe that's dragging it down a little bit. I don't know. It's down 50 points, no big deal. But it's just grinding its way up into this resistance. And like many stocks and markets and sectors to varying degrees, they somewhat negated or completely negated this big bearish weekly bar from a couple of weeks ago, which is pretty impressive to do that after 9-10 weeks moving up, and then negate a red bar like that, which this now is forming a continuation pattern higher. And continuation patterns historically after moves like this are lower odds. I have seen them work, but when they occur at the beginning of the move, they're incredibly high odds patterns. So you can take this as a trigger above here with a stop below here, but I can tell you it's not the high odds setup that it would have been if it happened down here. And the NASDAQ 100 just decimated that bearish bar, not only retracing into it, it closed above it, well above it. So, and this is all tech, semiconductors, internet stocks, semiconductors, SMH actually broke out above this level here. And I explained in the advisory letter to be aware if this is an inside day today, because that would be the beginnings of a breakout bar failure. I don't know that it'll happen, but when I see a breakout like this with a minor topping tail, that's one of the patterns that comes to mind. Well, if it's an inside day and breaks below it, that's a breakout bar failure, and that creates uncertainty. And so we look at patterns as a picture of what others are doing with their money and what are their expectations. So it's very easy to imagine what they're doing by just putting yourself in the picture, so to speak, and you're saying, well, if I bought that breakout and there was an inside bar, you wouldn't be that concerned at the moment. But if it starts moving lower and breaks that low, you're going to do something, right? Reduce the position, you're going to sell, or maybe you're going to hang on. And many times this pattern does result in a complete move back down again. So we'll see what happens. If today, on the other hand, takes out that high and closes higher, well, the breakout bar failure scenario is gone. And we've got a pretty bullish picture here on the weekly time frame. That said, the old high is lurking just above. So can it make new all-time highs? Well, it's darn close. And the other, let's just get rid of this. The other ETF actually did. Remember, what is that symbol? SXW? No, I don't think it's XSW. That's software, which is closing in on an all-time high. SMH made the move. The odds higher is low. No, Tony. What I'm saying is that it broke out. That's bullish. So one of the thoughts of looking at a pattern like that, well, it rested for a few days after getting up there. Well, let me just here, this XSD. This was a new all-time high and now pulled back, and it didn't push up. There's different stocks in the two ETFs, but both semiconductors. So the thinking behind this pattern is it rested here a little bit, and a lot of things moved up Friday. So Monday was an up day last week. Tuesday, Wednesday, Thursday, pretty much where just, go nowhere days. And then Friday, the different degrees they moved up. But the thinking here is that after a little bit of a rest, why did it back off from the end of the day? Maybe nothing. But the pattern, the way it sets up, which I explained, is you get a breakout, get an expansion in range, you get a little minor topping tail, you get an inside bar, and then it breaks the low of the inside bar. So I'm not saying it'll happen. I don't know the future. But if today is an inside bar, it's definitely something we're going to be looking for on tomorrow. So let's see. And we looked at the NQs, which are bullish. They look like they're going higher here. Just chopping around here, pre-market, as you can see, nothing happening. And S&Ps, they pushed above the high. And we'll see if this can now follow through. So far, red bar ignored, big bullish reversal, says it's going higher. Let's start with, can it take out last week's high? And if it does, can it hold Friday's low? So we have a couple of reference points as to what to look for. Does it move up? And if it does it hold above this level here? Oh, and spiders, it's going to be the same thing. Things are just quiet here, pre-market, not much going on. And you can see, just chopping around here. And there was that little continuation move on Friday that started right from the get-go, and then things just kind of got quiet. It's a Friday. Russell, sell setup. And another thing I wrote about in the letter is how can these other markets look bullish, like they're going higher, and we've got the Russell and the transports that look like they're going lower? One or the other has to join to some degree. So if those markets are going higher, well, I think these probably hold up or don't go down very much. And if other markets move up strongly, it'll possibly this sell setup here, second topping tail, actually fails. And if it trades above this level, I have to believe that there's going to be a little bit of short covering that could fuel this to go higher. I don't imagine that much higher because there's resistance right here in the 200 MA. This is why we look for what we call the price void. Do we have a setup? What is the trend? If there's a setup and a trend, and then we get a trigger, is there a price void which is supportive of a larger move versus some kind of a move that starts and just hits the next wall of resistance or support if it's going in the other direction? And Qs, same thing. And spiders, there's just a lot of going nowhere at the end of last week. So Tuesday gapped up and just hung there. Thursday gapped up and just hung there. And nowhere. Friday, positive, but went nowhere. And just lastly, look at our internals, which option traders stepped up to buy calls again. After it got to an extreme here, we got the dip, and sentiment didn't even get down to the bullish level, and they just started buying again. And after that run to buy after that little dip, what was the expression Greenspan uses about excessive exuberance or whatever? It's just like this is getting a little frothy as to the bullishness after a run like that into resistance. So we shall see. Irrational exuberance. That was a good term. And so we'll see. The bottom line here is the day-to-day put-call ratio. So if the markets go up and this closes up here, that historically is going to result and some kind of corrective action, usually the next day or two. So we don't have alignment here of breadth and sentiment, so no trigger, but you can see how breadth, has been deteriorating for a while. That hasn't stopped the markets from going up. And while it broke trend here, it got back up into that resistance to reestablish that trend last week. We've got these disconnects between markets. That's a concern. We'll see which one takes over, whether it's up or down this week. But they're out of alignment, whereas before, with these pre-market commentaries, I would say everything's in alignment. They're moving together, and that was bullish. And now we've got this disconnect through different sectors as well as the broader market. So, we need to be aware of that, and we are. And we'll see how this all resolves itself in the coming days. That's it. All yours, Dan.
All right, good morning. Yeah, and I also mentioned in the letter, in terms of this exuberance, and the one article was even, the fear of missing money, getting on board the moving train, that there was a very high input of mutual fund money last week. People fear of missing the rally. So that just goes hand in hand with your call buying sentiment. Hey, Christopher and others. All right, you see here the Qs here selling off a little bit pre-market. Let's look at our opens as always. Tesla call spread. It should be, just the weekend risk. We should have more open profit. Knock. We're short stock. Lulu, we actually met our 5-cent target on the downside, but I'm keeping this on my list, 30-minute low, maybe for a swing short. Look at that beautiful shakeout. Weekly is this head right here. VIAB, we're short stock. I said you could have added Friday on the 1, 2, 3. Looks like it's gapping down a little bit. So I'll be looking to tighten stop in the morning session. GBX, we're short stock. Stop the high. Triple V, been in this for a while. We're just in trail mode, short stock. Urban Cowboy, we have a call spread and short stock. KHC, I'm not in, but it's on my short watch. This poor thing can't bounce. So, 10, 15, 30-minute low. Golf Tango, we're short stock. We're just going to let it play out. IWM, we have a bear put debit spread, which just, tagged it. But if you gave it a little bit of extra room, I actually put it in as a new bear call credit spread in the weekly trader under Thursday's low. Netflix, we're watching this over the highs for a new trade. Echo Alpha, we had a put spread that expired full profit in the weekly options trader. And then we also had one in our swing letter that expires this Friday. That looks fine. NVIDIA, we sold a put spread for next month, way out of the money. Boeing, remember it was cracking on the 15-minute chart into the close. And this is a perfect example of, let's just book our money and reassess over the weekend. And we're getting a big bearish gap down, and this level is held before. I have no idea if it's going to hold this time or not. But if it can negate this on more bad news, the Department of Transportation is investigating now, then it's on my list. And then if it fails, like I said, let it sell off another $30, $40, $50. And then we'll be looking for this identical bullish setup for our put spreads at lower prices. ACB, we have a put spread that looks great. MJ, that looks great as a directional and put spread. Cisco, we're short puts for next month. I've moved the stop break even. I think I got them all here. Oh, CGC, another put spread. It's neutral, big old sideways range. All right, let's look at some gappers here. Overstock. That's a bearish pre-market. This is a perfect pre-market for bears. Gapped up, igniting, engulfing, basing at the low. Has a little bit of a price void, so we'll start off as a day trade. That looks great. So that's a tier 1 for me. Putting it in a window. AMID 517, big old gap. And the way it's going so tight, it might be a buyout. IQ, I just posted as a put spread over 15-minute high. I like this consolidation here from this wide range bar, rising 20, 200. Let's see what that does. Deutsche Bank, I saw in the paper, they're trying to look to merge, but I don't like ADRs. Same with Caesar's Palace. We were watching this on this breakout. I think we traded this breakout on this. Yeah, because I remember that gap. Absolutely. It didn't hold. Now it's a mess. FOS gapping up, no pattern, and it's an excessive. I typed this in. I sent a text alert to our swing folks. Gapping to 111. That's bullish daily, weekly, monthly. I have that in this middle window. WP, if they're buying a company. So that's rare that the acquire or goes up to, just history. Acquire or goes up, acquire down. Derm, excessive gap. Looks like a bio. All right, so WP is getting bought out. Just some miscellaneous things here. JP Morgan, if we can get a put spread here at the 104. JHG, I'm just watching it. It broke out and it's building support here. FOS, we looked at. PAA, Barron's mentioned had an article, a bunch of stocks that might be bullish, but you know what? I don't read the article because I don't care about it. I just pull up the symbols and see if there's any pattern I like. And these were the ones that I wrote down. WMB, look at that, bullish on daily, weekly, price void. That looks great. PAA, the same, but a little bit sloppier. JHG, maybe that was on the list. Slob, that's a textbook sell setup. Look at that, broke down, rallied to resistance, to the 20, bearish 1, 2, 3 on the weekly. ECA, it needs to go sideways more. This thing broke out, obviously, Friday on volume. If this can give us a 1, 2, 3, meaning an inside day today, that will be a no-brainer for Wednesday. HCLP, bottoming here on the weekly, oversold. ALDX. It's coming in hard. You need a reversal bar, but if it can hold here, it's your 50% retracement, so it's a watch. KJ. I don't like Friday's reversal bar. That's kind of a little failed breakout in a downtrend. So I got no interest in that. All right, look at our IQ here. Oh, IQ's failing. So see, no harm done. Now I got no interest in it. A dollar retracement off that bullish gap. ENB. Yeah, it's a sloppy sell setup. I don't like the overlapping bars. So slob is a, cleaner under Friday's low. Halliburton. Well, that's a deep gap now. It's probably gapping up because of the, positive mentioned and Barron's. We have this one on our condor list. Big old range bound. Daily, weekly. Fizzler. I was watching this on a